Hello everybody, Jason Manili with Team Manili here once again, and I'm here to talk to you today about capitalization rates or cap rates and how we use them to analyze your investment properties. So I've got a client and she's looking at buying an investment property here in Prescott, and we have identified 3 different properties. And so since the market's still moving quick, inventory is still tight, we have to use a quick analysis to understand which property would be the best one to submit that offer on. So we use what's called capitalization rates. And I'll just go through these really quick just so you get a quick understanding of it. And so a capitalization rate is just trying to understand what percentage of money you're going to make on your property throughout the course of a year. So we use a couple different numbers. We use our net operating income, your NOI. And in this scenario, we're just going to say it's going to be $12,000. Okay, so we're going to say our property is going to be a $100,000 property. It rents out for $1,000 a month, and so that's that $12,000, right? $12,000 net operating income, and then we tried to deduce what your maintenance operating costs are going to be. So we are going to take into account your taxes, your utilities, your maintenance costs, whatever you might think they might be. And that might change a little bit on each property, right? Depending on which county you're in, how old the property is, those types of things. So we try to take into account that. In my experience, I have used a 30 and a 50% multiplier. So if the property is new, say less than 10 years old, I use about a 30% multiplier. So if you're taking in $1,000 a month and you're using a 30% multiplier, you're going to use $300 a month for your maintenance and operating cost, right? If it's an older property, say, older than 20 years old, you're going to have a little bit more issues with your plumbing's a little bit older, your mechanicals are a little bit older, and so your operating costs are going to be a little bit higher. So then I typically use a 50% multiplier on that. So if you're taking in $1,000 a month, again, 50% is going to be your $500 mark, right? And so when we do this, we take into your net operating income, so your $1,200 or your $1,000 a month, and then we have your multiplier of whatever it's going to be, your 30 or 50%, and we do that per annum, right? So per year is how we use that. And so $1,000 a month, $12,000 a year. So if I'm using my 30% multiplier, that is going to be $3,600 per year of my $12,000 income, right? So that comes down to $8,400 total net operating income, right? So we take that $8,400 per year, divide it by your purchase cost of that property, which in this scenario, we're going to use $100,000. Just for easy numbers, that'll give us an 8.4% cap rate. That is a fantastic cap rate, right? You can compare that to multiple different investments where you're getting 8.5% on that. Plus, you've got all kinds of tax benefits for owning properties. You've got appreciation of that property, at least in today's current environment. We're still seeing that. So we look at these numbers, then we look at it across the board, right? So we have 3 different properties. We run this number for each of these different properties, and we can make a very educated guess on which property is going to be the best one to put the offer in on. Now, when we get in the contract and we have our inspection period, then we can really get down to the nitty-gritty and find out the true numbers. We'll get the real operating cost of the property and really get a very defined number for your operating income. So if you guys have any questions, you find this interesting, you want some more information on buying a investment property and how to analyze them, please give me a call. I'd be happy to do so. And you can reach me on my cell, online, on the socials, all over the place. So hope all is well. We'll talk to you soon, and have a great 2022. Thanks so much for watching, and good luck with all your real estate adventures.